Thanks for coming out tonight. We have a podcast for those who don't know. We're going to be giving away a Cunningham gift card and some Roots swag. If you subscribe to the podcast, DM it to us on Instagram at roots.realty.co, and we'll make that announcement later tonight. So everybody grab your phones out. There's not enough phones in your hands. Subscribe to the pod. Go to Instagram. DM me a screenshot confirming $100 date night.
Ooh, do it.
With that, here's some of the guests that we've had on the podcast. We're pouring a lot of time and intention because we're like, there's a lot of time in between these masterclasses, and we feel pretty called to continue to tell stories like Jeremy's, or how Nick Giuliani got robbed for $100K and was able to recover, or how Nate Spangles, the cheerleader of Indy, putting Indy on his back, putting us on the map, Jared Christie slinging loans and building portfolios. So please subscribe, please watch. Support's amazing. And with that, we'll get the panelists up here.
All right, if Sib and Ethan, our special guests, would come up. Come on up, guys. We got some seats for you right here. I've had the pleasure of knowing Ethan for quite some time. I toured his he has a factory that's building brand new modular homes, and he's doing it in one of the most disenfranchised parts of Indianapolis. So Ethan's doing some incredible things, other things that I didn't even mention. And then Sib has gone from, student rentals to building apartment buildings, and now advising other clients on how to build wealth. So excited to get into some new development and how to build a life of freedom with you guys. So keep it going.
Before we jump in, if at any point in the night, this phone number is going to be up on the presentation the whole time. If you have any questions that are burning a hole and you want to ask these guys, maybe your one and only chance ever to have two of these fine gentlemen in front of you who are just powerhouses in our community. So text the number. We'll get your question asked. If we don't, I'll text you back tomorrow with a good answer. So with that, enough promo. Let's get into the show. I'm going to kick this one to Sib first. For somebody in the room that's a newbie, what is a real estate related job that you would suggest they can jump into to break into real estate?
Yeah, absolutely. I think the best way to learn real estate without putting your own capital at risk in the beginning, two options. One is real estate brokerage, and the other, I would say, is property management. That really gives you a good feel of basically what leasing is about, what tenant issues are about, gets your ear to the ground as well about where the opportunities are, where the challenges are. And the best part is you're learning without putting your own capital at risk. So I personally feel that's the best way to start.
What was a first related job for you? How did you kind of break in? What was your first job near real estate?
Yeah, so for me, I stumbled into real estate. So my transition to real estate was not a very typical move. I actually was in diversified financial services. I worked for 3 Fortune 50 companies. So I had a completely different track. But after my MBA, I got my MBA from Duke University. And I just wanted to go down the entrepreneurial route. And the timing was good because it was 2010 at that time. That really was a good time to get into the real estate market. So I figured that with the financial background that I'm bringing and some of the capital that I've accumulated, I could perhaps do well with real estate, and it worked out really well.
Ethan, what was a first real estate related job to you? What was kind of your foothold in?
Yeah, I got started in lending before I began in real estate, and I was in asset-based lending specifically. So I understood at an early age what value could be created through distressed situations. And I remember I was working for Wells Fargo at the time, and I did the liquidation of a mid-sized manufacturing company, and they had a loss reserve of $1 million, and we were able to recapture all of that money for our employer, Wells Fargo. And thankfully, I got a $50 gift card and a ball cap, but I really understood what wealth could be created through those distressed situations.
For somebody sitting in the room who has no real estate, has no real estate related job, what would be a good way in 2025 to kind of break in?
I think just like Sib said, to work for a company that's established. I remember I bought our first big apartment community, over 100 units, and I hired somebody who was working for Buckingham at the time. And for us, that was transformational because they had all the systems and procedures and processes to run that property right. So I'm thankful for Brad Chambers and the deposit that he's made. And I'm always happy to hire some of his graduates because they really understand how to operate real estate well. So to echo what Sib said, get paid to learn the business on someone else's dime.
Yeah, I was talking to somebody here who we've helped them buy a house, and they're like, I'm having troubles getting something leased. And they're like, is that just part of it? Am I paying for my education? I'm like, yeah, absolutely, and on your dime. But you guys are saying, put it on somebody else's ticket. And there's some great sponsors who are just up here, all willing to hire somebody in the room. So if you need a connection directly, hit us up and we'll make that happen.
All right, just going into what we're all here to learn, which is how do you actually make deals happen? So I'd like to, we'll start with Ethan. Ethan, tell me about a favorite deal that you've gotten to participate in and drive forward. And what did you learn from that experience that stuck with you?
Yeah, it was right around the financial crash, and there were a bunch of duplexes that were owned by GM. And it's like, why would GM own a bunch of duplexes, right? Like, this doesn't make sense. So the land underneath the duplexes was contaminated at the time. Is this being recorded? Hopefully we can edit this just a little bit, but no, it's all, it was okay. The units themselves were connected to a public water source and not a private water source. So they sold these duplexes to us for a great price. I mean, you guys, your minds would boggle. We renovated them, leased them up, and then we resold them. And then we 1031 the money into a 152 unit apartment complex that was owned by a couple of people who used the complex to churn their money through the complex. And my family ended up falling in love with the residents of that community, and it was really transformational for us as a family. And my daughters ended up going to school with a lot of the residents of that community. So that one's near and dear to my heart, Tyler.
I heard a story, and I want to confirm it with you, that on Saturdays, sometimes your family helps tenants move into their apartment units. Is that true?
There has been an instance or two, yeah. And I guess you can really, when you're friends with an individual whose family, and you're actually the ones evicting them, right? You kind of think through that decision and what impact does that truly have, and what options exist for those people who are currently being evicted. And for us, that created more grace-filled policies. It wasn't just one and done. We provide, ample opportunities, but yet we have to operate with boundaries as well. So if we file eviction 3 times, that's it. Like, we're done, But the first time, if you pull it out of the fire, that's okay. Like, we'll celebrate that, and we'll allow you to reside in our community. And then behind the scenes, we have a nonprofit foundation that is able to help select residents over time, and being able to empower our residents with, some grace that they can offer some of our residents has truly been one of the more rewarding aspects of multifamily for me.
Same question, but favorite deal. I think for me, it's a more philosophical answer. I think I'll first generalize about what deals have been successful, and then I'll mention the specific deal that was my favorite. The deals that have been successful, I think the running theme in all of them that you guys can utilize, and I'm sure a lot of you guys are already utilizing, is that the money is generally made or lost at the purchase. You obviously have these great ideas about what you want to do with the deal, what improvements you want to make, how much value you want to add. But the biggest principle that I've seen with real estate investing and investing in general is margin of safety, and obviously that's a concept borrowed from Warren Buffett. But ideally, you never want to pay fair market value for a deal. You want to buy it below market, because right away then you have equity in the deal, and that creates your initial margin of safety. And other aspects that I think the general philosophical themes that help a deal be successful are that you want to be looking at where the puck is headed in the market and in the economy, and not where it is today. So you want to be looking at what the rents are going to be in the future for that particular property, what demographic situations are going to be for that location in the future, where things are headed, what interest rate environment is going to be like. So again, the margin of safety and just keeping an eye out for where the puck is headed, I think, is the general tenets of successful investing and real estate investing as well. For me, my favorite deal, ironically and interestingly, was an inflection point in my investing career, because I started out investing in Class A market rate properties, did a lot of that, and started in 2010. That was a great time to get in the market. It was very lucrative, made good money doing it for a decade. But a decade into it, like every time I would take a step back and look at, okay, I'm making a lot of money. Is it making my life better? Is it making me happy? And it was interesting that as my wealth grew, my happiness diminished. I was spending a lot of that money, but it wasn't making me happy. And for me, the turning point was, so I built the Elan apartments at the corner of Mark Kennedy Street in Indy downtown. On one side was Artistry, on the other side was Wheeler Mission. And I had the audacity to give myself the penthouse at the Elan. And I was renting out the other units. I was living in the penthouse. And one evening, I'm just looking out the window, and Wheeler Mission, there's all these beds, and there's this one person looking at me, and I'm looking straight at him, and we made just eye contact, and I just literally, I felt ashamed in that moment, because the reality was that here I am, just focused on my own life, and I've been blessed, but what am I doing for that? And literally right across the street, the situation is so different, and that was the transformation in my own journey towards investing. My interest in impact investing grew quite a bit. My first stop was, again, public finance investing, which was low-income housing tax credits. But I soon realized, and the catalyst for that was Ethan, that you can actually have so much more impact through impact investing when you are using private dollars and you're not necessarily relying on the government sector or on Uncle Sam to kind of help you out. You can actually have a huge, huge impact on people's lives, and you'll still make the same money, but it'll be so much more rewarding. And again, you'll be serving the kingdom. And truly, like at that moment, like I reevaluated and redirected my focus, and I've been happier ever since.
So it sounds like your favorite deal was when you took money and flipped it upside down and led to spirit. So I love that. That's awesome. When evaluating real estate deals, what is one metric that you always go back to? I think you guys maybe buy deals in some unconventional ways where some things don't make sense to the rest of you guys. If there's one thing to lean up and listen to, it's the impact that they'll have to this answer.
I think I could start by stating that you'll get contrasting answers between Ethan and I, because the way I describe it is that I'm a technician and he's a magician. So I purely look at deals from, again, and again, I've not graduated to that level that Ethan's at, because my skill set, I'm able to look at deals from an analytical perspective, from a numbers perspective, from tangible metrics. And then I see him do deals, and it's like this magic touch where just whatever he touches, like, so I'm a student as well. I would love to hear his answer about how he picks things.
So I was a meat cutter before I got into real estate, and I always look at the price per pound, basically. So we got a contract on a deal up in Fort Wayne, and it's below $40,000 per door for a really pretty decent asset. I think on a commercial building recently, we were about $50 square foot. So remember, like, you make money when you buy a property, like, just receive that as truth. And how you get into a property is going to determine your basis for the whole hold period. So I'm more of a price per pound kind of individual.
Elaborate on that a little bit further as you're looking, like, what's the thing that has to be right, has to be a balance when evaluating real estate?
One more time, Max.
What's the one thing that has to be like at balance when buying real estate?
Yeah, I think for me, it has to be somewhere that I would want to live or would be okay with somebody living. So a non-negotiable, and we renovated a huge complex in Evansville. It had been lit on fire, bleach in the hallways, all the crime and everything else. And we ended up, we ended up doing a great job on the renovation, but we couldn't control the community. The community tore down the fence that we put up, and it was just like too much. So I really want to be able to control the asset, and we've been forced to start our own security company, led by a former detective and veteran, who really does a great job. If people don't have safety, then you really don't have an asset, right? But this particular deal, there were 4 fires there, 3 people lost their lives. And when we did the physical inspections, there were beeping smoke detectors. So it's just like, man, how can this exist, And yet it's so hard to pull a permit to do a bathroom remodel. It's like just the insanity of the whole situation drives you bonkers. But, I really want to be able to control and steward the land well, and we need to do everything we can to accomplish that.
Sib, you kind of did a cop-out answer, so I'm going to press into it a little more.
Yeah.
You told me the story of the lawn, which is, and you can correct me if I'm wrong, was essentially a 1031 from some student rentals in Bloomington, or maybe some assets in Bloomington, to a 71-unit apartment out of nowhere. How did you know that was a good opportunity?
Yeah, so I think in real estate, there is no substitute to educating yourself and deep diving. You need to be literally a master of a lot of different things. You need to know a little bit of law as well when you're negotiating some of these purchase and sale agreements. You need to understand the basics of, again, lease law as well. Environmental regulations, you need to understand that as well. You also need to be able to understand the market very well as well. And that's where, again, there's some brokerage experience or having good brokers that you can talk to, or having access to good research, whether it's through CoStar or through ERD Matrix. There's tons of data available. So there's no substitute to just becoming an expert in it. You can wing it and have some deals that are successful out of luck, but to consistently perform well, you really have to develop those expertise. So yeah, like I was developing student housing in Bloomington, but I saw the writing on the wall that the supply-demand imbalance with at least at that point in time, because obviously it's all cyclical, but at that point in time, the supply was going to start overshooting the demand soon, and obviously that was going to put pressure on rents. So I started looking at other markets, and Indy downtown at that time was at that sweet spot where the demand was building, but supply had not caught up at that time. So I saw that piece of land in Indy downtown, right across from Artistry, and seemed like a great location because, again, there was already a great apartment building right next to it, again, did a phase 1 on it as well. Just made sure that sat with my contractor to get a rough idea of how much the construction is going to cost, and then based on that made an offer. Again, you have to think through all of those things before you even make the purchase. Have a very, very definitive and good plan of action with contingencies of what would happen if rates go up, what would happen if prices would go up. So you got to think all those things through, model them out. So it obviously takes time and it's painful in the beginning, but a few deals under your belt, it becomes second nature to you. And over time, you develop a gut instinct as well. Like I said, technician versus magician. When you have enough deals under your belt, 3,500 apartments or more now, then you do over time develop that gut where it gets smaller. The whole analysis part gets more intuitive as well over time. But again, I would highly encourage you guys to, when you're starting out, do develop expertise, either personally or connect yourself with other experts that you can collaborate with, but try to just, again, leave no stone unturned when you're investing. And that's how you can literally grow your wealth at a fast pace.
I love it because every time I talk to you, Sib, I feel like I'm winging it, and you're like be a subject matter expert, subject matter. I've heard that so many times.
Or again, find the right group of people as well, because it is a team sport. At the end of the day, real estate really is a team sport. So
And all of us are going to build the next Elon, right? You should still take that same level of due diligence for maybe your first single family rental, because moving on to the next question here. This one, we'll go back to Sib. I know you're pretty passionate about analyzing the marketplace, and you have I think a unique insight into that. So how do you feel about the market right now? Is now a good time to buy, or are you holding back on certain types of deals?
So real estate is unique in the sense that no matter what the economic cycle is, no matter where prices are, no matter where interest rates are, since there is information asymmetry, again, with the markets like stock market, where there's so many buyers and sellers, and there's so much public information out there, mispricing of assets does not exist as much. But in real estate, because of limited information, because of limited understanding and knowledge, because of, again, price discovery, there are opportunities that can be found at any point in time. Obviously, it's easier to make money when the cycle is in your favor. A rising tide raises all boats. When I started in real estate, it was very different than what it is today. Again, 2010, prices were historic lows, interest rates were historic lows. There was cap rate compression happening every year. So every year, property prices just kept going up. You could buy anything. All you needed was just basic common sense. Buy anything, put some lipstick on that pig, and you could sell it for like a higher price, pardon my French, but you could sell it for a higher price a year or 2 years on the road. Those opportunities do come up every decade or so from the economic cycle perspective. Right now, obviously, we're not in that situation. There is economic uncertainty. There is high interest rates. Inflation might come back as well. So with all that uncertainty, at a macro level, real estate is obviously, that's why you feel that the market is frozen. There's less deals happening. But that's where your expertise comes in. And real estate, since it is such a zip code by zip code, block by block kind of business, if you find an area where you're seeing potential growth in the future, you become an expert at it and see, okay, again, from a single family perspective, multifamily, retail, self-storage, what asset class is going to perform well based on supply-demand imbalance. You can find those diamonds in the rough even today, but obviously there's times when it is easier than other times from a macro perspective.
At some capacity, you have to be a dreamer and see what other people can't, right? If everybody's walking at the same place.
Yeah, imagination and vision definitely are huge. So never lose your imagination, because all this talk about performas and numbers, those are important. But at the end of the day, I think, imagination is important, especially for development, because when you're building something brand new, it's a figment of your imagination that ends up on a piece of paper and then becomes a actual tangible product that people are going to live in, people are going to work in, people are going to enjoy. That's where the more creative and imaginative that concept is, I think the more value it has.
Yeah, Ethan, I would love to hear your perspective.
Yeah, well, Sib's nickname was Artificial Intelligence when we worked together, so I'm thankful you're getting to share with everybody. He's just a machine, the way that he can digest and regurgitate information, and I just wanted to call out that gifting in you. I think like every transaction that you do, and we're over 300 transactions in, is an opportunity to practice your craft, right? To get better at what you do with systems and processes. And, I think of real estate as like a calling, and, it's more my heart that would pull me to specific transactions than an internal IRR rate. Like, I've been doing this for over 2 decades, and I didn't even know how to calculate that until like Jalen taught me about a year ago, I think. So I just looked at how much you're buying it for, what are you going to spend on it, and then what will it be worth? And if you can recycle the money, it's eventually going to work out, right? So think about the velocity of money. Think about dropping $100 bill in the washing machine and seeing how fast you can get that money to spin. And even if you're not making huge margins, if you're doing deals, you're building relationships, and relationships are worth more than transactions 100% of the time.
So is it a good time to buy or no?
I would say absolutely yes. Now is always a great time to buy real estate. I think for us, it's a passion and a calling, and we've got a house factory that will eventually produce 2,000 units a year. I think if everyone agrees that we're in a housing crisis, like what are we doing to be part of the solution as a community? And thankfully, we've got 2 educators here who are working as conveners to bring this city together so that we're not operating in our individual silos. I can tell you, like, my first 12 years, how many other like developers, investors did I connect with, like less than this table? You know what I mean? And here we are with a dozen tables full of human beings that would clap when they hear Sib's heart being poured out. So I think it's a great time to get involved in real estate. I don't think we're doing well as a city with the full utilization of our assets, and how we care for the least of these is how we should be judged as a city. And I can assure you there's enough wealth in this community to make sure everyone has a drywall box to fall asleep in.
Some walls and a roof to call home, right?
Yeah.
Yeah. I'm going to stop the regular programming for just a second. So if you guys were asleep, good morning. I hope you weren't asleep. This is awesome stuff. We got some giveaway winners. Ryan B. So Ryan B. in the room. Ryan B. over there. What did he win? Cunningham gift card, or which one did he win?
Ryan B. gift card.
Sweet.
Okay, I'm breaking back.
Who is the other winner?
We got at Red State Blues.
At Red State Blues.
No, I'm sorry. Are you ready?
You're at Red State.
Double. Black winner was at Drew Dial Rear.
Drew. Dial Real. Over there. There we go. You got some Roots swag. Keep texting your questions in. If you guys can't see the phone number, ask somebody at your table. They probably have my number, hopefully. I'm going to keep this one with Ethan. You're building in an underserved area using methods that many people probably wouldn't bet on. How do you stay grounded in that? Where's the calling, and how can people help you help everybody else?
Yeah, so we purchased a house factory on 30th and Post. It's 250,000 square feet. We sit on 22 acres there. This house factory has an entrepreneurial center called P30 attached to it. And P30's mission is to ignite hope, disrupt inequality, and launch prosperity for the people of the Far East Side. And I'm ashamed to say that I was always afraid to go down Post Road. I was kind of taught that there's nothing good on the Far East Side, and that was a lie from the pit of hell. There are beautiful human beings on the Far East Side, and so what we're trying to do is to create wells of prosperity in an economic desert. And if an individual wants to be employed with us, we provide housing, transportation, obviously employment, and there's even access to daycare nearby. About 40% of our current workforce are formerly incarcerated individuals, and I've seen those people transform and flourish once given an opportunity. So we provide living wages, skills training, a 401k contribution, even if they choose not to contribute. We provide major medical insurance, dental insurance, and we're able to create housing in a more sustainable way for our community. So I get jazzed up. I'm the grandson of an electrician, and my father-in-law was a carpenter. I get jazzed up, and I think there's a lot of dignity in working with your hands and working with your body every single day. And when you look at somebody in the eyes and tell them they're living a life of significance and doing something that they should be proud of, it's a really big deal. So we've now made our biggest investment at the corner of 30th and Post, and there's no assurance it's gonna work out, but I think our greatest gift is faith in what will be, and I think we're doing a good job at being part of the solution to the housing crisis that our nation is facing.
Is there a way that we can buy into that financially or a help that people can give?
Yeah, we need orders. So anyone who would like to become part of a incremental real estate development opportunity, we'd love to be able to share the playbook with you. And honestly, I was thinking on the way in here that you guys are educators. I think we could create a module on modular development because there are a lot of pitfalls with it. And I think to get into it with eyes wide open and clear expectations is really what needs to be done. But has anyone ever heard of unconscious incompetence? It's like when you don't know what you don't know, right? So when we got into this, there was a lot of stuff we didn't know. And now we somewhat know most of the things we should know. So we've really come a long way. We produced almost 1,000 units through the factory. Next year we'll produce 700 or 800 units. We're currently producing for a job up near Traverse City, Michigan. We have a couple others happening in Kentucky. And it breaks my heart because my home and my heart is here in Indiana. And I really think that the citizens of this city should repair the broken teeth of this city, and that's the vacant lots that exist all over the city of Indianapolis.
Yeah, I love that. I'm sure there's somebody in the room that will be able to buy in. We need what?
Deep tiny house.
We need tiny houses. Yeah, lots of them. So you went from college rentals to leading development projects. How do you make that leap? Where does that turn come from?
Yeah, again, it's purely based on where the opportunity is. Because even in Bloomington, I had single family rentals. I had some mixed use as well, some multifamily as well. When I came to Indy, the first project was obviously Elon. Then did some triple net retail leases as well. So Basville, Ball and Biscuit, Hotworks, and Walgreens on Mass Ave. So I'm the landlord for those guys. So it's basically wherever the opportunity is, again, being able to buy things at below market price, having that margin of safety as well. And again, focusing on the right locations and markets where there's future growth that's going to happen. So wherever the opportunity lies, and that's where, again, constantly studying, reading about what the numbers are telling you, what the news is telling you, obviously like sift through those and just try to, it's almost like a mosaic theory where putting together disparate information and piecing it together to, again, coming up with like a thesis of where the future is headed.
You gotta be the investigator of the area. A lot of people in here own single families, duplexes, and you guys have lots and lots of doors that are all together in the commercial asset. How could somebody make that transition? Really asking this selfishly for myself. How do I own more?
Yeah, well, we started with a double wide trailer in Owensburg, Indiana, and so I cut my teeth on single family. So I have so much empathy for everyone here in the room. Like, it is a real grind, right? You're making 50, 100, 150 bucks a month, and then a tenant moves out and it's a $3,000 move out, you know? Unfortunately, you do a really good job renovating it, and then, it's like, well, it's not good enough to resell right now, so I'm going to place another renter in there. And so I go back to Monopoly, right? You start with one greenhouse, then 3 greenhouses, and then eventually get towards the one red hotel. So we needed to sell our single families, move into duplexes, triplexes, quads, 16s, 32s, 64s, and now our strike that we're called to is between 70 and 300 units. Why is that? Because I can have professional and competent people there every single day to watch after my assets. So anybody who's killing it in single families, like, you're a better person than me. Like, I couldn't do it. So God bless and amen to each one of you. And I know there's a real need for that, but it's difficult to manage scattered sites and actually grow your portfolio. By the time you hire the competent and professional people and put them in company-owned vehicles, like, sorry, there's nothing left, So I just recommend trading those assets out over time.
There's no scale there. And if you need to sell those green homes, Roots Realty can help. Just kidding. Sib, I'd love your perspective on what Ethan was just riffing on.
Yeah, absolutely. No, he's spot on that obviously compared to scattered sites, there's so much more economies of scale, more efficiency, reduced cost with the multifamily, because obviously it's right there and you can manage it so much more efficiently and better and more have it be more consistent. Obviously, it's very hard to break into unless you have a certain amount of capital. In my view, the best way to shortchange that and move quicker is, again, finding a right group of investors that you can work with, pooling money together to buy a bigger asset. Again, I feel that that's a good way of growing wealth, especially if you have a general partner, GP role in the fund. Then you're not really making a lot of monetary commitment. You have limited partners that are not going to be involved in the deal, in the day-to-day management. They're just providing the money, but with you providing the sweat equity, you get maybe 20% or so of the deal. But that's where, again, being a subject matter expert is so critical, and having, like, first of all, finding the right deal, making sure that the investors feel confidence in your competence level, that A, you'll be able to find the right deal and be able to run with that project as well and help the investor make money. So I really feel that for people that don't have a lot of capital but want to do the bigger deals, that is something that they need to basically study and learn. How do you set up a real estate fund? And again, developing those relationships and those that competence to be able to attract the capital and then grow like that. Because honestly, that's how I've seen people make the most money in real estate. OPM, other people's money. That's how you do it.
It's funny, every apartment syndicator developer I know says, don't do single family homes. But then you look at all their track records, where they start single family homes.
Yeah.
It's hindsight's 2020 there. This is someone that I own 11 single family, 2 to 4 unit type properties. So I'm right there with you. Last question here, guys, or last pre-planned question. We had some audience questions. We packed the house tonight. I think a lot of people came out, and a lot of people came out because they're drawn to your guys' stories and what you've been able to achieve. But I don't think it's all because of the dollars and cents and the cash flow numbers. They can go watch YouTube videos about that. There's better recordings on YouTube than what we're sharing right here. It's the people side, right? And I think Indianapolis is unique in that there's a real heartbeat following the spirit here in the city. So both of you guys have taken pretty bold paths, I would say, really betting on yourselves towards redemptive investing, which is prioritizing people, community, and long-term restoration over short-term profit and gain. This is kind of a vulnerable question. Where have you gotten this wrong, and what are you proud of accomplishing in that domain?
Yeah, we'll start with getting it wrong. And I've made so many mistakes. I've told people before, like, in Harvard, education is super, super cheap. Actually, if you look at how much money I've lost in doing the wrong things in the wrong sequence or at the wrong time. But really, the wound in my heart that I carry to this day is hiring inexperienced people for big jobs. It's a really, you're sharing when you're bringing somebody into a position, and if they don't have the experience to carry the weight of that position, a lot of damage can be done. And wounding a relationship to me is, the biggest thing that I've done wrong in my real estate career. I guess one of the most things that I'm proud of is my daughter, Ava. She's a sophomore this year at Ball State, and she's doing an internship at our apartment community in Anderson, Indiana, and then also at the house factory. And it's great to see her come home covered in paint and sweat and picking up trash and just forming community with the property manager and maintenance team. And she was administering drug tests at the house factory last week, and the guy, he decided to take an Uber home instead of continuing on employment. And to see the next generation really acknowledging the beauty in the human beings that reside within our apartment community and who work in our house factory, to me, there's nothing more rewarding than that.
Yeah, I think for me, the biggest source of pride really is the creative side of it. When you create something, especially ground up construction, and it's there forever, it's going to outlast you and outlive you. And just being able to watch people use it, enjoy it as you had envisioned. An anecdote I remember about it, like early on when I started real estate development, my son is 20 now. He was 10 or something at that time back in Bloomington. He was out with a class a trip or something, and the kids are walking in Bloomington downtown, and he points to one of the buildings and tells his friends, "Oh, my dad developed that." And then he goes on to tell them a story of how basically I negotiated the deal, because I used to take my son with me, like in those negotiations, and he'd be playing with his toys and stuff. But apparently, he was picking stuff up. So the teacher later on called us and told us, and yeah, that was definitely a moment of pride. I think, yeah, like regarding regrets, I think sometimes what can happen is that real estate, yeah, if you execute it well, it can be extremely lucrative. And the reality is that since it is passive income, over time, you are going to have enough income that you don't really have to be working super hard, unless obviously you're doing it for the love and passion and keep doing one project after another. There is a tendency, or it can happen that you let that success get to your head. It can lead to pride as well. It can lead to you becoming wasteful as well, because obviously all this passive income that is coming in. So being cognizant of that, and for me, I think that was something that at one point in my life and career, again, I realized that, wait a minute, like, is this wealth making me a better person or not a better person? So that constant introspection, I think, is key, because you guys obviously are passionate about real estate. You're all here. You are going to be successful in real estate. So staying cognizant of what your true North Star is and what your true purpose in life is, and not let the success and the money basically, again, cloud your judgment and cloud who you are as a person.
Yeah, I love that. Got some crowd questions. We'll kick the first one to Ethan, specifically about volume mod. Are they selling on single lots, or is this for full neighborhoods?
Yeah, we love to do mass production. So our whole thing is efficiency, right? We like to run a lot of the same units down the line, so there's a standardization of work process and materials. So I really think, like with incremental developers, we could batch orders maybe a couple times a year. You guys could prepare your lots and then know that, hey, we're going to run incremental in April and September of each year. We really want to build up the incremental developer base, because large development companies aren't going to do scattered site, single family infill development. Our vertical cost is $90, $100 per square foot out of the factory, and they ship about 90-95% complete. So think of Volumod as a super subcontractor. Basically, it's 17 different subcontractors with one price that you'll receive delivery on a certain date. But it would be up to you to secure your lot, get it properly zoned, put in your foundations, prepare the utility connections, and then finish the last 5 or 10% on this new home. But I believe that it is the way to rebuild our city. You guys know skilled trades are becoming more and more rare. And, you know, now with the things that are happening with immigrant labor, that's only going to increase the cost of construction over time.
Yeah. Sid, well, yeah, we'll kick this to Sid. What's the most difficult part of the development process today? Equity, debt constraints, city being tough.
Yeah, so you definitely have to bring in way more equity now than what you had to in the past. And obviously the margins can be thin as well. And that's where, again, it's so important that at every step of that value chain, you are making sure that you're finding as much efficiency as possible. Again, buying the thing at the cheapest price, negotiating hard on that, never pay fair market value for anything. You got to find those distressed opportunities, those undervalued opportunities. And then also finding efficiencies in the construction, like the design, the construction, finding those, and it's always going to be a moving target. If a contractor is good this year, they might not be good the next year. So always having a Rolodex of architects, contractors that you can turn to. It really is a relationship sport. And so you got to make sure that you always are able to find the right team to ensure success.
What are some ways that you're finding deals? Like, where is this networking? Are you going after wholesalers? I know that's not true.
I think, yeah, over time, relationships are key. So the best deals I've done have not even come to the market. They were directly brought to me. And again, if the word spreads in the market about your credibility, about your authenticity, about the fact that you're going to do right by the seller, you are going to be true to your word, over time, people come to you, like whether it's, again, buyers, whether it's contractors, when you're ready to sell. In those moments, like, again, having your brand and your name, I think, is the most important asset you have. So making sure over time, the relationships and network that you build, you're able to do justice to those people, and it all pays off in the long run.
I'll kick it over to Ethan, and then we'll do one more. So you're talking about monopoly, being able to turn the greenhouses into commercial. What are some ways with financing to turn that corner, education-wise? Like, it's playing on a different field, right? How do you take the leap from JV to varsity?
Yeah, well, I was thinking that the most important thing is that you keep your chips on the table, right? Too many smaller, developers that make 15 grand and go spend 12 of it. No, you got to keep all your 15 grand in, like when I was doing all the single families, like we fed our family on the $2,000 minimum commission that was paid to the brokerage, but all the money that was in real estate stayed in real estate. So you got to be able to keep your chips on the table. And for me, I'm not a networker, and I never took a partner for the first like 7 to 9 years. My real estate attorney, when he set up my first LLC, and get the name, it was Ethan D. Fernhaber Real Estate Investment LLC. It was the lamest name ever. And he's like, yeah, I'll set up this LLC. That'll be $1,000. But when you're ready, your bankruptcy is $3,000. So just be compared. I've seen guys like you coming through this shop. And eventually he approached me because he saw the way that I work after 7 years. And he said, I'll do the financing for those contaminated duplexes that you want to buy. I have a buddy, he owned a gold mine in Africa, and we'll handle the money, you take care of the work, and we'll split the profits. And I'm like, all right, because I can do a lot of work. Like, I know how that feels, and you have money, and that's great, because I wasn't raised, with, abundance, right? My wife and I, our home equity line of credit was $20,000, and our first purchase was $20,000. So that was it. Like, we were all in. Like, too many people moved out and we had to sell and eat a vehicle. Like, that is real. It's just, so I think building relationships over time, keeping your money on the table, and then talk to your network, right? There's lenders who want to do deals with you. And when SIB refers you to a lender, that carries a lot of weight, right? Like, we're all talking about economic capital, but there's intellectual capital, the things that you can figure out. And then most importantly, like social capital, the people that you've already established trust to. There's people here today, I could say, give me your wallet, I'll give it back to you tomorrow. They just do it. You know what I mean? Because we've established that much trust together. And that's an intangible benefit of doing a lot of transaction volume with a high moral standard. And that gold nugget that SIB dropped, your buyer reputation, I'm known as like a fixer, right? So I'm okay with leftovers. Like, the real buyer didn't work out, but Ethan, we've got one for you, so, and that's okay. I'll be the person who's taking leftovers. But, you know, we need to come in with $100,000 or $500,000 non-refundable. We need to display the faith that we operate with, that we will close on that transaction. And when the inspection results come back and the shingles on building 12 need to be replaced, we're not going to whine about that $15,000 CapEx. We're just going to eat it and take it because it would bring a $350,000 discount on our next opportunity.
Yeah, I love that. The buyer reputation's huge. I think in the single family land, we lose sight of that. This is a small city. People do remember you on purchase agreements, and I have plenty of stories centered around that. Couple of things that we'll ask from you, totally free event, so need some coins back in the coffer. We've got a great next steps banner here. Come to our next event, December 6th, I believe. It'll be right back here. We'll have some new panelists. We also in September have a happy hour. We don't just do master classes. We have connectivity between. We've got Real Estate Collective that meets in the mornings every couple months, and we have happy hours throughout. So if you're not connected to that, just go to rootsrelated.co/events, and you'll find that, or scan this QR code. Take a call with the team. There's a bunch of people in Root shirts. They're in Root shirts besides my parents. They are agents. So make sure to pull one of them aside. Just have a talk. It doesn't matter. We're not going to throw a BAA in your face and make you marry us. We don't want to be married to you yet. We want to learn you too and have a relationship. And lastly, subscribe to the podcast. Tune in. There's a ton of stuff. It's December 4th edit on that, not December 6th. So that was last year. It was on December 6th.
Sweet. Last final question. Really quick, what's one action step everyone here should take today? One step you recommend everyone take?
Yeah, I think go back home and introspect about what truly is most important to you, because everything else, the real estate, any business, any investing, all that you're doing, it has to come from a bigger meaning and a bigger purpose. And once you discover that North Star, I think everything else keeps falling in place. So yeah, I'm sure a lot of you know your North Star, but if you don't, do figure it out, because I think that just eases a lot of decisions and opens paths for you.
I would say express gratitude to Max and Tyler. I mean, they have put a lot of energy in creating great content and convening the real estate investors in our city. I don't think this is common in other cities throughout the nation. So just bless these guys, do all the subscribing, and maybe just write them a note of encouragement, or be sure to call them on your next appointment or listing opportunity.
I did not plant that answer on his lips.
So true, though. Thank you.
You guys are awesome.
Nice.
Let's give it up for our panelists. Alrighty, we have plenty of drink tickets. Please get more beer. The tab is on us. Please use that up and go out there, go meet someone, go set up some coffee appointments. Do not walk out of here not having set something up. So set something up and let's increase the connectivity. But thank you guys for coming out. Appreciate you. Bye.